What's up, YouTube? Welcome to the Credit Plug channel, where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, then we definitely welcome you to subscribe. Otherwise, you can support our channel if you just like, share, or comment right down below. It helps our content get out to a wider audience, and we greatly appreciate all the support. As a reminder, we will be hosting our Credit to Cash Flow Zoom webinar this Friday, July 3rd from 7 to 8:30 p.m. Eastern Standard Time. There's a link in the description. If you haven't registered already, we will be covering various different strategies on how to monetize your credit accounts and credit data in order to generate different income streams. Now, if you're unable to attend live, there will be a recording for all program participants, so you can still check out all the great content that we're going to cover. For today's video, I have another financial institution review. Now, a lot of the content that we put out on the Credit Plug channel is focused primarily on credit cards, lines of credit, and loans from the major banks, credit unions, and credit card issuers. However, there are other great sources for you to get funding, especially on the business side. Now, there's a lot of fintech companies out here that are offering non-traditional lending using other data besides your credit. And then one of the most underutilized sources of funding are CDFIs, which are community development financial institutions. So CDFIs are nonprofit financial institutions, generally to serve a particular mission. Now, the CDFI that I'm going to be covering today is called ACCION. ACCION is one of the largest CDFIs in the United States. So they offer business loans as well as other technical support for small businesses. And CDFIs in general are going to fit the void where a lot of commercial banks usually fall short of. And so because commercial banks are very risk averse, they usually want highly capitalized organizations. They're going to want established companies bringing in revenue with a proven track record because they're really profit driven. So one of the ramifications from that is that a lot of small businesses or businesses where the owners might not have the collateral or credit criteria really aren't able to have access to the funding that they need to grow their businesses. So that's where CDFIs step in. So ACCION actually has a variety of different credit programs, but they really have two different buckets of funds. So the first bucket is their internal funds. So they go out and they raise money from donors and other philanthropic organizations who lend ACCION or other CDFIs money at a very low interest rate, usually 0%. And then they in turn will pass those funds at low interest rates to their borrowers. So that's one pot of money, the money that they go out and raise themselves. The second pot of money is from the SBA. So they also administer the Sba Community Advantage loan program. And so there are different criteria for each of these programs. So I'm going to go over first the criteria for their internal lending. The minimum credit criteria is a 575 credit score. You can't be past delinquent on any debt obligations, 30 days or more past delinquent on any debt obligations. And for any past due accounts, you can't owe more than $3,000. You can't have had any bankruptcies in the last 24 months. And you can't have any foreclosures within the past 12 months. Pretty much those are the bare minimum credit criteria. In terms of, the other criteria, you're also going to have to provide a business plan, and you're going to have to provide, if you're an existing business, you're going to have to provide 2 years of revenue. If you're a startup, you're going to have to provide 12 months of monthly cash flow projections. As a matter of fact, existing businesses are also going to have to provide that as well. So I know a lot of people might be somewhat intimidated when it comes to putting together a business plan and projected cash flows. But when you think about it, they're offering a lower bar when it comes to collateral as well as credit. So because of that, lower threshold, they're going to just want to know a little bit more in terms of how you plan on using those funds, because ultimately they want to know that when they give you this money, you have a plan to deploy that money, and that plan is going to allow you to repay that debt. So just think of it. The more money, the better qualified you are, the less questions they're going to ask. The less qualified you are, the more questions, the more documentation they're going to want from you. So, don't be too intimidated. They will offer, like templates or just, what they expect to see within a business plan. So all it takes is a little bit of due diligence and research and effort to put that together. And if that's the difference, between you having access to the money you need to grow your business and not having it, I think it's well worth just going through that effort and putting that together. Remember, if you have bad credit or relatively, subprime credit, and you have a business, you can still get funding through CDFIs. If you just do a little bit more due diligence, put together a business plan, and just a little bit more documentation. So that's pretty much the bare minimum qualifications for their internal lending. They have the Sba Community Advantage loan program, which the minimum credit score is a 525. Yes, that's right, a 525. Oh yeah, and then another thing, one of the most important things when it comes to getting a loan from any financial institution, but especially with a CDFI, they're going to want to see that you can cover your cash flows. Your monthly cash flow can cover what's called the debt service. Now, the debt service is just basically your monthly debt obligations. So what they'll do is they'll look at your existing monthly operating expenses, and then whatever your loan request is, right, they'll take that monthly payment and tag it on, and then they just want to see that your cash flows can cover that. And you're also going to want to probably have a little bit of padding tacked onto that, just in case of things that might affect your business, whether that's seasonality or a shortfall in monthly revenue or anything like that. And usually you're probably going to want to set aside another 5 to 10% on top of that. So that's kind of the formula to use when trying to figure out, okay, how much money can your business actually take on and be able to repay back, with the least amount of risk. But anyways, so the Sba Community Advantage, it's going to, like I said, 525. And then if you're a new startup, you're going to have to come to the table with a minimum 20% owner equity capital injection. So basically what that means is, let's say your total project cost, right, is $100,000. So you need to, as the owner, and this could be collectively if there's multiple owners, need to come to the table with 20% of that. So that will be $20,000. And there's, this is just the example that I'm using. The Community Advantage loan program is a minimum of $50,000 all the way up to $250,000. So if you want to borrow, if the project cost is $50,000, then you're going to need to come with $10,000 to the table. If the total project cost is $250,000, then you're going to have to come to the table with $50,000. So that's, and to be honest with you, I mean, that's the usually the threshold when it comes to a lot of commercial lending is having that 20% capital injection. That's usually the bare minimum. And that's not too bad, especially for a startup, because there are ways for you to scratch up anywhere from $10,000 to $50,000 before you even go and apply for a loan. Just have that money already in the bank if you're a startup, that is, and then just put together a business plan and monthly cash flow projections for 12 months. Have all your ducks in a row. If you have a higher credit score, that even works out even better. That just makes you a little bit more qualified. And overall, I think there's a lot of benefits from CDFIs. Again, they're going to have lower thresholds when it comes to collateral, as well as just being an established business. Like you can usually for like a startup, you're unless you're highly capitalized, you have some type of investment in your business, it's very highly likely that you're going to be able to walk into like a Chase, a Bank of America, a Wells Fargo, or any of the major banks and get a business loan as a startup. It's just not going to happen, especially with no money of your own already coming to the table. So definitely check out some CDFIs. I'm gonna put a link in the description. If there's anyone out here who's gotten a business loan through ACCION, definitely let us know in the comment section right below. But I definitely think this is something that a lot of especially the subscribers who are business owners, and you might be struggling, trying to get funding through business credit cards and stuff like that. Definitely consider some CDFIs. I'm definitely going to be covering a lot more of them because I think there's a lot of gems in these types of institutions. They lower the bar, but it's just a little bit more paperwork you have to put together. But think of it this way: if let's say you hit all the bare minimums, and you try to walk into a commercial bank with a 575, you're not getting any type of business loan, especially as a startup. So just keep that in mind, and don't be intimidated with putting together documentation. And it actually just helps you be more, just document exactly how you plan on using funds, because anyone borrowing should actually have a plan on what they plan on using that money for anyway. So that's all I wanted to share for this video. As a reminder, the Credit to Cash Flow webinar this Friday, July 3rd from 7 to 8:30 p.m. There's a link in the description to register. So until next time, we'll see you later, and